Guys, we're literally less than 3 months from when you need to submit your self-assessment tax returns. However, it's actually very important that you get this right, as failing to do so can lead to you actually getting quite a few penalties, which I'm pretty sure you do not want. So in today's video, I'm going to be talking about what exactly a self-assessment tax return is. I'm also going to be covering who might actually need to submit a self-assessment tax return, as well as some of the common mistakes that are typically made on the self-assessment tax return to ensure that you avoid those penalties that you could potentially get into if you fail to get this right. Hello there, welcome. My name is Tess and I'm a UK-based qualified accountant, and on this channel I share weekly videos to help fellow entrepreneurs like yourself grow and thrive in their businesses. So if you want to see videos like this on a weekly basis, then do make sure you give this video a like, make sure to subscribe and turn on your notifications. What exactly is a self-assessment tax return? The self-assessment tax return is basically a return that helps inform HMRC about any tax that you might need to pay on any taxable income that you have earned in any given year. Okay, so when you fill out this form, also known as the SA100, you will basically be required to include all the different forms of taxable income that you have earned in that particular year. Now, some of the instances where you're actually going to be required to submit a self-assessment tax return includes, but is not limited to, where you've earned over £100,000 in the last financial year, or indeed when you have earned over £1,000 whilst you've been self-employed or you've worked as a sole trader. You might also need to submit a self-assessment tax return where you have earned rental income from any properties that you've rented out here in the UK. The first common error that's typically made when submitting a self-assessment tax return is basically misreporting on your income sources. Now, when you're filling out the self-assessment tax return, it's very, very important that you actually include all sources of your taxable income. Okay, so where you've earned money from, self-employment, where you've earned money from freelance income, where you've earned money from being a contractor, for instance, it's going to be very crucial that you include all those different forms and sources of taxable income. Even things like dividend income will also be classed as a form of taxable income. So if you're unsure of what exactly a taxable form of income is, I would suggest that you seek the advice of a professional accountant who can advise. The next type of mistake that's typically made by candidates when filling and submitting the self-assessment tax return is when there are incorrect figures, okay, and also omission of particular information on the self-assessment return itself. So for example, when you're filling out the form, it's important that you take extra care for you to correctly add up all the relevant figures where they need to be added up. Okay, it's also important that when you're filling it out, you subtract where you need to. It seems quite straightforward, but you would be amazed as to how many people actually get this bit wrong. Okay, obviously this ultimately leads to you having the wrong final figure on your tax return. Another instance of where this issue might occur is where there are particular fields on the tax return that is required by you to actually fill out, okay? And in some cases, a candidate might be unsure or uncertain of what they're supposed to put into that particular field. And so they just decide, you know what, I'm not going to fill it out. But that's definitely something you don't want to do, because when you actually do this, HMRC will look at that tax return and they will get in touch with you, okay? They will mark it as an incomplete tax return and you will nonetheless still have to provide that information. So I would definitely recommend that where you're unsure, you seek professional advice, okay? Ask an accountant. I obviously help my clients to submit their returns on a regular basis. So it's definitely something I feel that where you're unsure, you definitely need to make sure that you have the professional advice of an accountant. Next common error I tend to see a lot of candidates making when attempting to fill and submit the self-assessment tax return by themselves is where they're actually over-claiming for allowable expenses. Now, as a sole trader, there are a wide range of different allowable expenses that you can claim to actually help you reduce the amount of tax that you're paying on your taxable income. However, it's very important that you're clear on what expenses are actually allowable. Okay, so if you are in the instance where you're actually trying to claim back any personal expenses that you have incurred, then those would not be allowable. Okay, so it's important for you to really be sure and be certain on what expenses it is you are claiming, and ensuring that these expenses are actually expenses that are business related. They have been incurred and generated for the business, solely for the purposes of actually running that business. Okay, it's very important that you understand the differences between, an expense that is for personal use and an expense that was generated predominantly for the business. Next common mistake I see so many candidates making is when they're actually underclaiming on their allowable expenses. Now, this could be equally as bad, okay, because when you're underclaiming on your allowable expenses, you're actually in the position of where you are not able to save as much tax as you could potentially be able to save if you're claiming all the relevant allowable expenses that you should be. Okay, so again, this is an error that is typically made by lots of candidates because they're simply unsure of what sort of expenses they should be claiming for. They're unsure of what categories those expenses may fall into. They are unsure of what should be classed as a business expense. Okay, so it's very important that you get clear on this, because you might potentially be missing out on tax saving opportunities where you have an expense that is clearly, a business related expense, but you're uncertain of it, so therefore you don't include it in your tax return. And when you don't include it in your tax return, you're not able to claim back on that. Okay, you're not actually able to save on some additional tax where you could potentially have been able to. Now, another mistake often made by lots of candidates is actually misplacing their UTR number. Your UTR number is your unique tax reference number, and this number is very, very important for you to hold on to, because you're going to need it when it comes to actually filling and submitting your self-assessment tax return. Obviously, one of the important elements that you need to consider when filling and submitting your self-assessment tax return is going to be that you actually understand some of the allowable expenses that you might be able to actually claim on. Okay, so I do have a video up on my channel already that shares with you some common allowable expenses that candidates will typically need to factor in when they're submitting a tax return. Okay, so do make sure you watch that video if you already haven't. Thank you so much for watching, and if you haven't done so, please do make sure you give this video a like, make sure to subscribe and turn on your notifications. I will see you in my next video.